world of money is changing. For years, we have talked about digital currencies. We have seen the rise of Bitcoin and other cryptocurrencies. These were often seen as separate from traditional banking. They were for tech enthusiasts and early adopters. Most big banks watched from the sidelines. They were cautious, maybe even a little skeptical. The technology was new and untested. The rules were unclear. But the world does not stand still, and neither does finance. The conversation is no longer about if banks will join this new digital frontier, but how and when they will lead it. This shift is happening right now. We are moving from a world of speculation to a world of application. Big, established financial institutions are stepping into the arena. They see the potential of blockchain technology. It is not just about creating new forms of money. It is about making the entire financial system more efficient. It is about moving value instantly, across borders, 24 hours a day, 7 days a week. This is a fundamental change. It promises to reshape everything, from how we pay for coffee to how large corporations manage their treasuries. The old guard is waking up to the digital dawn. The journey from traditional banking to digital assets is a significant one. Banks are not just buying cryptocurrencies. They are building the infrastructure for the future of finance. They are exploring how to represent real-world assets like money on a digital ledger. This process is called tokenization. It turns a traditional asset into a digital token that can be moved and managed with ease. Think of it as the next evolution of banking, moving from paper ledgers to digital databases, and now to shared, secure digital ledgers. This is a big step for institutions that are hundreds of years old. This new chapter is not being written by small startups alone. It is being driven by some of the biggest names in finance. Giants like JP Morgan, Societe Generale, and now Deutsche Bank are all making bold moves. They are not just dipping their toes in the water, they are building the boats. They understand that to stay relevant, they must innovate. They are bringing their decades of experience, trust, and regulatory know-how to this new digital world. This combination of old world stability and new world technology is what makes this moment so incredibly important for the future of money. Deutsche Bank has announced its own plans. The German banking giant is working with a Singaporean firm to launch its own stablecoin. This will be a digital currency backed by the euro. This is a major development. A stablecoin is a type of digital currency designed to hold a stable value. Unlike Bitcoin, which can see wild price swings, a stablecoin is pegged to a real-world asset. In this case, for every digital euro Deutsche Bank creates, there will be a real euro held in a bank account. This makes it a reliable digital representation of traditional money designed for payments and transactions. So what is the goal here? Deutsche Bank wants to use this stablecoin for corporate clients. Imagine a large company needing to send millions of euros to a partner. Instead of waiting days for a traditional bank transfer to clear, they could send the stablecoin instantly. The transfer would be secure, transparent, and settled in moments, not days. This is the power of tokenization in action. It takes the familiar concept of money and puts it onto a modern, fast, and efficient technological platform. It is about upgrading the plumbing of the financial system for the digital age. Now, let's talk about a closely related idea, tokenized deposits. This sounds similar to a stablecoin, but there is a key difference. A tokenized deposit is a direct digital representation of the money you already have in your bank account. It is not a separate asset, it is your bank deposit, just in a token form. It represents a direct claim on the bank itself. This makes it a very secure form of digital money because it carries the same protections and insurance as your regular bank balance. It is essentially your bank account, but with superpowers that allow it to move on a blockchain. The main difference comes down to who holds the claim. With a stablecoin, you hold a token that gives you a claim on the pool of reserve assets. With a tokenized deposit, you hold a token that represents your direct relationship with the bank. Both aim to provide a stable digital dollar or euro, but they are structured differently. Banks like JP Morgan have already experimented with tokenized deposits through their JPM coin. This allows their corporate clients to move money between their global accounts instantly. Deutsche Bank's project shows that the entire industry is moving in this direction, exploring different models for the same goal, better money. This new world of digital money cannot function without clear rules. Trust is the bedrock of finance, and regulation builds that trust. We have seen what happens when there are no rules. The collapse of algorithmic stablecoins like Terra USD is a stark reminder. These stablecoins were not backed by real assets. They used complex computer programs to try and maintain their value. When the system failed, billions of dollars were wiped out and confidence in the entire crypto space was shaken. This is why the approach taken by banks like Deutsche Bank is so different and so important for building a sustainable system. Deutsche Bank's stablecoin will be fully backed one-to-one by real euros. This is a much safer model. It is transparent and easy to understand. It is not relying on a risky algorithm but on solid, verifiable assets. This is where regulation becomes a powerful force for good. Lawmakers around the world are now working to create frameworks for digital assets. They want to ensure that any company issuing a stablecoin has the reserves to back it up. They want to protect consumers and ensure the stability of the financial system. Regulation is not about stopping innovation, it is about making it safe. In the United States, a proposed law called the Genius Act shows how seriously policymakers are taking this. The Guiding Responsible and Encouraging Off-Chain Innovation and Networking for Smart Contracts Act is a mouthful, but its purpose is simple. It aims to study and promote the responsible development of digital assets in the United States. It directs government agencies to look at how to create clear guidelines for things like stablecoins. The goal is to foster innovation while putting guardrails in place to prevent another Terra USD-style collapse. Clear rules would give banks and other companies the confidence to invest and build. This push for regulation is crucial for mass adoption. Most people and businesses will not use digital currencies if they fear losing their money. They need to know that a digital dollar or a digital euro is just as safe as the money in their bank account. The Genius Act and similar efforts in Europe, like the MiCA regulation, are laying the groundwork for this future. They are creating a level playing field where trusted institutions like Deutsche Bank can innovate safely. This will ultimately separate the reliable, asset-backed digital currencies from the speculative and risky ones, building a stronger foundation for the entire ecosystem. So, what does all this mean for the future? We are on the cusp of a major shift in how money works. The plans from Deutsche Bank, JP Morgan, and others are not just isolated experiments. They are the first steps toward a new financial system. In this future, money will be smarter, faster, and more accessible. Imagine being able to send money to family overseas instantly with almost no fees, or think about a small business getting paid the moment a sale is made, not weeks later. This is the promise of a tokenized financial world. This transformation will not happen overnight. It will be a gradual process. First, we will see large corporations using these new digital currencies for their internal operations and business-to-business payments. This is already happening with JPM Coin. As the technology matures and the regulations become clearer, these services will start to trickle down to smaller businesses and eventually to individual consumers. Your bank account might one day come with the option to hold and spend your balance as a tokenized deposit, giving you the security of a bank with the speed of crypto. The importance of this change cannot be overstated. It democratizes finance. By making payments cheaper and faster, it can help people who are currently underserved by the traditional banking system. It can reduce the cost of doing business, which can lead to lower prices for everyone. It can also create new opportunities for innovation as developers build new applications on top of these new financial rails. This is not just about a new product for banks. It is about upgrading the operating system of the global economy for the 21st century and beyond. As we stand here on June 9th, 2025, we are watching the blueprints for the future of finance being drawn up. The involvement of trusted institutions like Deutsche Bank, combined with sensible regulation, is the key to turning this vision into a reality. It is a future where your money is not just a number on a screen, but a dynamic, programmable asset that works better for you. The journey is just beginning, but the destination is a more efficient, inclusive, and innovative financial world for everyone. It's a fascinating time to be watching the world of digital banking evolve. If you found this look into the future of finance interesting, please like and subscribe for more insights.